Lyft, the popular ride-hailing app and Uber's biggest competitor here in North America, is about to go public. They have their IPO set for later this March 2019, and the real question that every investor is asking is Lyft stock a buy? In this video, let's take a look at their financials and let's answer that question. Guys, if you're new here, make sure to subscribe down below and drop a huge like on this video as well. This video did take a lot of time to research and I have a lot of information in here to give you a pretty good background on Lyft's financials, their business model, and where they may be moving forward. So if you appreciate that, a huge like would be much appreciated by me. So if you haven't heard of Lyft, the company before, here's the rundown. They're essentially an app which you can download for free and request a driver to drive you to your destination. In 2018, they had over 30 million riders with just under 2 million drivers. Also in 2018, they had $8.1 billion in bookings, $2.2 billion in revenue. They're present in 300 markets, in other words, cities or towns, in North America, and they've completed over 1 billion rides. And their number of rides have been consistently increasing quarter over quarter, approaching nearly 200 million rides a quarter. So these are pretty impressive stats for a company that's well known to be number 2 in the industry behind Uber. And if you're wondering more about the financials, how much cash they have, how much money they make or lose, I'll be going over that in just a few, so make sure you stick around and watch the whole video through. Lyft also went ahead and released information on their drivers and riders. So far, the company has paid over $10 billion to drivers, with 91% of their drivers driving less than 20 hours a week, and 34% of the drivers are actually 45 years or older. Now on the riders side, 46% of riders actually use their car less thanks to Lyft, 35% don't own a car, 52% use Lyft for their daily commute, and 44% of rides start or end in low-income areas. And again, this kind of supports why there's such a high number of people that use Lyft that don't own cars. Because again, as you can see from the stats, a lot of rides either start or end in low-income areas. And when we look at the data, it's pretty clear that their number of active riders has been growing consistently quarter over quarter as well, and is expected to continue on this path for the foreseeable future. And on average, Lyft is currently earning around $36 per rider, which is an impressive number because if they can grow the number of riders that use their platform from currently 18 million a quarter to around 36 million a quarter, which is about double, they can in theory increase their revenue massively with a $36 per rider figure. So you can really see that Lyft, the service, has helped a lot of people out there. It's provided jobs to a lot of people, and it's really helped people get from point A to point B, with sometimes even being the cheapest option available. Lyft also claims their services go and help out communities as well. As you can see here, they predict that 34% of riders spend more money at local businesses because of using Lyft, and 47% of riders explore more of the city thanks to Lyft. 700,000 unique riders have donated to charity, and 14% of riders use Lyft to help them use public transportation easier as well. This could be going from point A to point B, because a lot of public transportation, say you're using a train, you need to get to that train somehow. So a lot of the users will use Lyft to get from their house to the train and then use the train after that. So this is pretty cool, a lot of interesting facts and some pretty good numbers here that Lyft has posted. And it is interesting to see that they do claim that they do help a lot of local businesses as well, thanks to their service. But now here's where things get interesting, and if you're an investor, this is where you want to listen up. Lyft themselves have come out and posted a list of risks that every investor should be aware of. And what I've done is I've actually addressed the most important ones in my opinion. I've highlighted those, but if you do want to read through all of the lists, you can pause the video and you can take a look through that. I'll also leave a link in the description down below if you want to go and check out the actual filing. So anyways, looking at this list here, first you can see that they say they have a history of net losses and they may not be able to achieve or maintain profitability in the future. Right off the bat, this is concerning as a potential investor. And they explicitly tell you that they lose money and may never become a profitable company. So you gotta ask yourself at this point, do you want to invest in a company that may never become profitable? The next point here is that they say that they face intense competition and could lose market share to their competitors. Uber is of course the #1 competitor here for them in North America, and Uber has significantly more market share than Lyft as well. Personally, I've used both apps myself and I've found the service and experience on Uber far superior to those of Lyft, so this is a valid concern to have. I know a lot of drivers actually drive both Uber and Lyft, so you may feel the service is comparable. But what I did find was that a lot of Lyft drivers were ex-Uber drivers who did get a pretty bad rating, so they restarted on Lyft here at a high rating in hopes that they can maintain a high rating on that platform. So that's just something to keep in mind, something that I've noticed. Next, you can see that they state their insurance programs may not be sufficient for their needs and also could result in big losses, which in turn could exceed their insurance reserves, which is definitely a concern. Also, in regards to autonomous driving, they recognize that this is something that they need to focus on. So it's something definitely as an investor you should monitor closely to track their progress on AI to see if they're actually working towards an end goal here in AI. And then here finally on the second page, they state that they rely on third-party companies to do background checks. In my opinion, this is fine, but a lot of people can get around the system and this could cause some serious lawsuits and concerns for the company in the future. So that's another huge liability that you're taking on as a potential investor in Lyft. Okay, so now we're going to look at their financial statements, and if you're still interested after all the things that I've gone over in investing in Lyft, the next few minutes may change your mind. As you can see from this graph here, over the last 3 years, they have been increasing their revenue at an exponential clip, growing from 343 million in 2016 to 2.2 billion in 2018 in revenue. This is impressive growth in such a short period of time, and if we assume they grow at a minimum of 2 times year over year for the next 5 years, we can see Lyft pulling in nearly $70 billion in revenue yearly. So there's a lot of potential for growth here for this company because $70 billion is reasonable considering they have a lot more expansion to new cities to go and worldwide eventually as well. But the reality is there is competition in this space, not only in North America, but on a global scale as well. And this competition starts to affect them where it hurts most, and that is with their profits. Now you can see from this graph that their losses are not growing as exponentially as their revenue, but the losses are still staggering. Even in 2018, they had almost $1 billion in losses while bringing in $2 billion in revenue. So they're burning through money very quickly. Their cash balance is also currently just over 500 million, so they are going to have a hard time, in my opinion, staying afloat if they keep losing $1 billion a year or more. And yes, they do have $3.7 billion in assets, but I personally like to see more cash set aside, especially in a business that's losing so much money year over year. And this kind of brings us to the point of an IPO, an initial public offering. Typically when companies go public or they IPO, more often than not, it's because they do need that extra capital to help with their business, to help fund projects, to help kind of offset the losses that they've been suffering. In some cases, the IPO is kind of like the saving grace for companies, where in some cases where they do an IPO and that saves the company, and without an IPO, the company would actually go bankrupt. So as a potential investor, you gotta ask yourself at this point, okay, so Lyft has $500 million in cash, but they did lose $1 billion last year. Now, what if they lose $1 billion this year, next year, maybe a couple years from now as well? What is the plan here? Is it going to be to issue more shares? If that's the case, that's going to dilute your position. Or is the end goal here to get acquired by a competitor? I don't really know what Lyft plans to do, but these are questions you need to answer and you need to be comfortable with if you plan to invest in this company. Me personally, I would not be touching this business, I would not be touching this stock until they can prove they can turn around the business and start posting a tiny profit at least every single year. And when they say things like they clearly expect their expenses to increase in the future as they develop and launch new offerings and platform features, expand in existing new markets, increase their share in marketing efforts, and continue to invest in their platform, it's almost certain that the next few years will continue to be money-losing years for the company. But to be fair, this is something that a lot of companies go through. A lot of companies have very tough years in their first few years of business. They lose a lot of money. But if you can see Lyft becoming profitable in say 5-10 years or so, if you see that path to profitability, then maybe this would be a good opportunity to enter this company at a very low IPO price, which for a lot of stocks ends up paying off over time if the business becomes very profitable. Now, Lyft does have a couple of good things going for them, the investment from Google being one of the biggest. And if you don't remember, let me refresh your memory here. In 2017, Google actually invested $1 billion in Lyft, and then later that year, they raised that investment to $1.5 billion. And based on the financial that we saw, this is definitely something that helped Lyft at that time, and most likely helped the company get through tough times and not go through bankruptcy. We did see that initially they weren't pulling in too much revenue, but they did have a lot of losses. So that investment from Google could have been the saving grace that they were looking for. Another thing that I have noticed as a customer of Lyft is that when I do check the two apps occasionally, Lyft and Uber, for a ride, I do notice that Lyft is often cheaper than Uber, even if it's by just $1 or $2. But that's something to keep in mind because there are a lot of consumers that will look for the cheapest option regardless of service and still go with that. So in that regard, Lyft may have a good advantage there. But again, that's a minor personal reason, and that isn't something that you should use as a potential investment for Lyft. But what I really do hope is that this video provided you good insight, good information on the financials and the health of the company and where the company plans to move going forward. And using all this information, I hope that it helps you make a better informed decision on Lyft's IPO and whether that would be a good investment for you or not. So like I said, they are set to go public very soon, most likely in March 2019. And in my opinion, this is going to be a very, very volatile ride for any investor that chooses to invest in Lyft on their IPO day. A lot of money can probably be made from this investment, but a lot of money can also be lost from this investment. I haven't 100% made my decision here if I'm going to invest in Lyft or not, but I can say with pretty good confidence that I'm 99% sure that I will not be investing in Lyft myself. I'm just going to be sitting on the sidelines, eating some popcorn, and just watching that volatility. Hope you enjoyed this video, guys. Remember, drop a huge like to support the channel. Thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one. Peace.